every organization needs to get in some control measures, so that at least at the end of the day, these control measures or activities, and also a very robust or sound operating environment will allow for efficient processes. In addition, these control measures are designed in such a way that they will help to reduce the fraud, the waste, any inefficiencies or ineffectiveness around the organization. Today, we're looking at how these controls work, the security measure study, which are supposed to be put in place. And of course, we'll look at audit and assurance, how they play key roles in running an organization efficiently and effectively. Okay, so again, if you take the business and technology or accountant and business ACCF 1 text, you find it in chapter 16. Let's kickstart. So in terms of security, these are the items we'll be looking at: internal control systems, the controls in place, and of course, we'll be looking at internal and external audits and what objectives we need to put in place in order to make sure that internal audit and external audit functions run efficiently. Also, we'll look at briefly some data systems, okay, and security. What are internal control systems, someone may ask? It's simply a combination of two functions: the control environment and control procedures. And they are designed such that they ensure that the business is run in a very orderly manner, okay? The idea is also such that it helps to safeguard the assets, the resources of the organization in order to prevent fraud, detect fraud, and of course, to correct any anomalies which are identified. Also, good, efficient internal control systems helps to ensure the completeness, the accuracy, and of the accounting systems and records, so that we can always place reliance on these accounting systems. And these control systems and activities, these control systems as a whole, which is made up of the activities and then the procedures, helps for preparing sound financial statements or financial reports, corporate reports in a whole. 5 items fit into the control systems. We have the acronym CRIME. So the C for control activities, risk assessment for the R, I for the information systems, M for monitoring and evaluation, and of course, E for the environment. And of course, when we talk of the control activities, the specific internal control activities, we've grouped them with the acronym SOAP-SPAM. Okay, SOAP-SPAM, they are 8 in number. So principally segregation of duties, who does what, and at what time, the organization structuring, okay, authorization and approval from appropriate officials, physical controls, okay, like inventory controls, okay, there are physical controls, supervision, personnel, arithmetical, talk of the computations, and overall management. Controls, like I said initially, could be preventive, where we stop the error from occurring. They could be detective, where we pick up these errors, which we could have prevented, and corrective, where we put in controls to rectify these identified errors. Okay. We could always use IT systems within internal controls. Almost all systems today use IT systems, okay, to ensure that financial controls are robust enough. They could be detected as and when, or immediately, okay, so that we don't wait till it gets out of hand before we struggle to fix it. So these IT controls are usually could be financial controls, they could be operational, okay. So for financial controls, they are principally used to check financial data, ensuring that strong password security systems are set in place and staff do not exceed their threshold limits which have been assigned them. For operational controls, we are looking at the IT controls we put in place for the day-to-day running of the manufacturing or the production functions, operations, okay? Example could be putting in system checks to ensure that each unit produced is not defective, so that if there are any defective items, the system could easily detect and then kick them out of the system. The risk assessment, we need to always implement some procedures and respond to processes in terms of risk assessment. Sometimes we want to share the risk, we want to absorb all the risk, or want to transfer the risk to a third party. So it all happens. Information systems we're looking at how the accounting systems work in order to produce credible financial statements. They could be automated or they could be manually oriented. And then also we monitor these controls where management will continually check how effective these controls are. The environment. So these are the crime components of the control systems we're talking about. The environment or the control environment talks about the entire organization, okay, the overall attitude of directors regarding internal controls and their importance. So it looks at the management style, the corporate culture, the shared values and abilities of the organization as a whole. So it is more or less like a snapshot of the entire control systems we have, okay, and how we respond, our attitude towards the control environment. Let's drill down to some control procedures. Examples could be approval and control. We might know some of this offhand, okay. Control of the IT applications and environment, checking how accurate our financial records are, okay, cash checking, also reviewing control activities, the control accounts, trial balances, reconciliations, talk of cash reconciliations, debtors control reconciliations, also looking at cash and stock levels in accordance with laid down procedures, check whether they jive with the records. Also limiting access to assets and controls, putting some threshold measures so that not everyone can access every information. A typical case study, okay, talk of the sales order system. So a customer places an order by phone. What happens next? The controls we need to put in place is to ensure that the customer is valid. Check if the customer is valid. Who checks that? Is there any password restrictions to inquiries only, or everyone at all can check these orders? Once the order is placed by phone, it goes into a computerized system, all right? If it is manual, then somebody would have to pick the call and then check the details of the customer. But if it goes into the computer, let's assume it is an IT system, all right? Controls we need to put in place for the IT, for the computerized system, is again, password, strong password controls, or restricted menu, okay? You don't just go in and access everything on the system. Whatever is going on should have a user ID and must, of course, have a credit limit check, okay? Credit limit check. So you don't have authorization to pick any orders or to be able to assess all orders. Maybe for the operations manager up to 10,000, anything exceeding 10,000 should go to the CEO or the CFO, so on and so forth, okay? Set price limits within the system. Also check the stock level controls, okay, the limits to see if I'm ordering 10,000 units, who is supposed to check this, who is supposed to handle these queries, and then also place in maximum value quantity, like I've just said. Now, assuming the computer also picks this up, what is the next thing? We put in some invoices, okay? Maybe some 5-part invoices. What are the controls? The controls to have a sequentially pre-numbered invoices. No goods should go out without a direct notification or a debit notification or a direct note, a debit note. Okay, so it is ideal that once we are issuing the items out, especially in times when we are not receiving cash, okay, a debit note should accompany it, all right? Customers must sign a copy of this debit note so that they know that they have an obligation to pay, all right? Otherwise, if it is a direct payment, the person has paid cash, then some receipting system should come in place to ensure that the customer has actually received the goods and acknowledge. We can also get a system acknowledgement that we've received cash, okay? Otherwise, if it's on credit basis, then the debtor should sign off this debit note. And then this debit note must be matched to the invoices. We keep it on file to ensure that we get our cash when due. Internal checks must be done day to day, okay, on every operational transactions that we deem necessary, of course, so that one person's work is proved independent of the other to prevent and detect fraud through division of work or delegation of duties, segregation of duties, let me use that word more. So day-to-day checks and who does what should be very clearly stated. So this keynote is highlighted. Efficient internal checks should make extensive fraud virtually impossible except by means of collusion, unless you and I want to collude and then I sign off, you sign off, when we all know that it's illegal. which is not advisable. We'll look at fraud risk soon after this video. All right, so this is a quick one. Try it on your own. On Aula, there's a worksheet, okay, you'll find it, which talks about internal control activities, okay? So for column 1 has examples of internal control for different areas of a business. So your role is to complete the second column by thinking of what the consequences would be if the controls did not exist, okay? At least you can see one example I've plotted in there, okay? At a later date, we'll look at this, we'll discuss it even at our tutorial times. A similar scenario is there. Okay, limitations on internal control. System will provide reasonable assurance, not absolute. So not all systems are foolproof. They could have defects, okay? Mind you, they are run by humans. So there could be human error. Systems could also make poor decisions. Systems could crash. We have people who can hack into our system. So any system designed by humans are prone to error. Management could also override these controls. There could be deliberate circumvention of controls. I collude with my friend to defraud the system. It's one key item. So one-off transactions, they could be non-routine in nature, and this could not be effective enough to use as a benchmark for future decisions or future control activities. 2 more items we need to know. We've highlighted this in the past briefly, okay? But let's look at internal audit and external audit. Internal audit is ideally meant to be an independent activity. Ideally, that should be. Same applies to external audit, independent examination of evidence, okay? But for internal audit, it is established by management. If we don't need it, we kick it out. But of course, the Corporate Governance Combined Code requires us, especially all listed companies in the UK, to have an established internal audit function. Now, internal audit function tends to examine and evaluate the organizational risk management, risk control systems, okay, and to also make recommendations to the company on how we can achieve our objectives. So it is internally driven. We want to make sure that everything is clean and we reduce risk as much as possible. For external audit, it is more financial statements. Normally, they do not go into operations. Internal audit can go into operations, okay? And external audit is meant to give the users of the financial statement some confidence to place reliance on this financial statement so that the external users can say this report is quite credible, okay? Typical differences of internal and external audit. Let's look at it. All right, so what's the reason for internal audit? Improve and value operations. That's value addition, let me say that. External audit to express opinion on the true and fair state of the financial statement, principally. Those are the reasons. Internal audit will report to the audit committee, which is made up of both NEDs and then executive directors, okay? External audits, they will normally report to the shareholders who are stewards of the organizations, okay? So the shareholders normally will contract these external auditors to audit the activities of the organization. What does internal audit relate to? Like I said, operations of the organization. External audit principally deals with the financial statements, any other underlying financial records. Who does internal audit? Normally, they are employees of the organization. They could be outsourced, but they are normally internally based. External are independent auditors, independent of the company, and like I said, they are appointed by the shareholders. All right. Once again, the procedures that internal audits take is similar to what external audits take, okay? Their basis could be the same, reasoning actually could be different, okay? They all have different functions which they use. Internal audit is normally regulated by the Institute of Internal Auditors. External audits has wide range of regulators, okay, by the standard setters and the rest. Of course, internal auditors' work are normally used by external audits. They place reliance on it, so a whole standard is on it, which helps us to drive value for the organization, both from within and from without, okay? The difference is mainly in the objectives. Internal audit has much wider scope, external audit per the terms of the engagement. And like I said, internal audit per the combined code of corporate governance, we are required to have it, especially for listed companies. External audit is required for companies over a certain size and threshold. If you make a certain sale, a certain company size, then you have to run an external audit activity over the organizations. What objectives of internal audit? We've mentioned them through the explanation briefly, but let's run through quickly again. So they review the accounting and internal control systems, they examine operational and financial information, and they look at the 3 E's, the economy, efficiency, and effectiveness. Do we also comply with rules and regulations? How do they safeguard? How does the organization safeguard the assets of the organizations? Okay, so that's also a function or an objective of internal audit. They look at how we implement corporate objectives to its fullest, okay? They also identify financial risk. They review and monitor these risk policies and strategies over time and conduct special investigations. So features of internal audit: accountability is one, where we account to the audit committee and they ensure our independence. Okay, if you look at the organizational chart, mostly you will see the audit committee standing as a standalone body to the board of directors, okay? So they need access to all areas. They are free to comment on performance of all managers, including the CEOs and the directors at the top. Their reports need to be actioned at highest level. Audit committee, okay. Independence, this is quite key to the organization, but not in practical terms. It's difficult sometimes to implement it if you don't have an audit committee, okay. So they need to be independent line of management where they report separately. They could have some administrative reporting functions to the executives, yes, but functionally they must report to the audit committee. And of course, they need to appraise others' work. So it cannot be part of a section to be audited, okay? So an audit function, internal audit, should not be part of the operations department where we have to audit the operations. No, we must be independent, totally standalone, all right? Question is, who audits the auditor? It's always been a headache. Sometimes the internal audit functions need to be audited, but usually that is done when the external auditors come in, okay? Types of internal audit which we can run are principally operational, okay? We look at the other aspects. So which is financial, we look at other aspects as well. So for operational audit, we're looking at performance of management delivering value for money, okay? They also monitor management to gauge efficiency. The other aspect of internal audit is systems audit. So they look at the controls of the organization, compliance tests, whether we are complying with good controls, whether controls are being applied consistently, and also looking at substantive tests to verify the figures to find any errors and omissions. And if compliance tests are satisfactory, the substantive test does not need to be exhaustive. In other words, when the controls are working, we don't need to vouch much of the figures, okay? All right, so external audit functions, So one step back. So you realize that the operational audit, which deals with the value for money, includes some elements of finance. In fact, the systems audit, which deals with also internal controls, looking at compliance, also deals with finance. So financial audit forms a key part of internal audit. It runs through both operational and then the system. Some literature would separate or split it totally by having operational audit, systems audit, and financial audit. But you can see clearly that financial audit overlaps in both areas. All right. External audit, the objective, like I said, trying to express an independent opinion on the financial statements to ensure they are fulfilling their legal obligations as an independent reviewer. It is done by verifiable consultancy firms. The method, they normally do annual visits. They can also do desk reviews in their offices, okay? Their relationship with internal audit, they will assess the competence, like I said, who audits the auditor. So they assess the competence of the internal audit. They place reliance on the work of the internal audits. Yes, like I said, and there's a whole standard which regulates that. One more aspect we should look at: data systems and security. Information is key if we want our business to continue as a going concern. Therefore, we must protect information. If you let information go out, you risk losing your customers or you risk closing down. So we must always prevent unauthorized modifications and disclosures, or even destroy data when we don't need it. But we should also try as much as possible to safeguard data that we need, okay? So business interruptions could occur if systems are not working, if computer systems are not functioning well, or we don't have available computer systems to safeguard our data. There could be potential hazards. Fire could break out, okay? Floods, storms could break out, and we could lose information. Do we have any data protection system, okay? recovery system, let me say that any data recovery systems that could help us retrieve this information. Accidents could happen, okay, health and safety issues could occur, all right? So these are important things we should note. We could also lose our equipment. You have a computer, a laptop, which belongs to the organization. You could lose it on the train, in the house. Somebody could break into your house and steal it. So these are all key items that requires controls to be put in place. So put in a strong security system, some hardware faults, mirror disk, okay, to ensure that we don't lose this. When there are natural disasters, do we have a remote storage site where we can retrieve all our saved data? Any fraud, espionage, we should limit access, okay? Any malicious damage could help, we could then restrict possibility, okay? Integrity is also key of the data that we collect or we use. So data inputs must be free of errors, let me say that, free of errors. So data input, make sure we don't have enough errors. Sometimes we make errors, but at least we should limit or minimize our errors to a minimum, okay? And then we should have some output controls. What do we put in? What do we get? Okay, there should be a sufficient report, okay? And of course, a backup on the clouds. Normally, clouds are very safe now, so put it on the clouds so that you can always restore it when you need it, all right? So these are key areas, like I mentioned, in terms of an organizational control systems, which we need to put in place to ensure that our system, our organization runs efficiently, to provide value for the organization, yes, and also to ensure we comply with all laid down rules and regulations that have been set by any regulatory body. At the end of the day, the business continues as a going concern in the long run, financially sustainable, operationally sustainable for the good of the organization, for the shareholders, and for any other person, any other stakeholders who have stakes or interest in the running of the organization. Great, excellent. We'll look at the next one in a bit. Bye.